Good day everyone. Today we will march on to discuss about environmental accounting, or in short known as EA. My name is Suhaila Abdul Hamid, your I lecture tutor for today. EA is the fifth topic in the Environmental Management course SBEV 3103. Let me introduce to all of you the learning outcomes for today's session. At the end of this session, you should be able to describe environmental accounting. Secondly, relate environmental accounting to sustainable development. Thirdly, identify the benefits of environmental accounting. And finally, apply the environmental accounting in your own organization setting. Before we proceed further, let us understand the meaning of accounting. Accounting is an instrumental within organizations as a means of determining financial stability. Without accounting, organizations would have no basis or foundation upon which daily and long-term decisions could be made. In short, accounting helps the organization to keep score when conducting business operation by reviewing the efficiency of operations based on the financial reports prepared by accountant. As shown in the slides, the definition on accounting by the Committee on Terminology of American Institute of Certified Public Accountants, AICPA, and the Accounting Principles Board. According to the AICPA, accounting is the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part, at least, of a financial character and interpreting the results thereof. And according to the statement of the Accounting Principles Board, number 4, page 8, accounting is a service activity. Its function is to provide quantitative information, primarily financial in nature, about economic entities that is intended to be useful in making economic decisions, in making reasoned choices among alternative courses of action. Now, let us begin our discussion on environmental accounting. Environmental accounting aims at achieving sustainable development, maintaining a favorable relationship with the community, and pursuing effective and efficient environmental conservation activities. These accounting procedures allow a company to identify the costs of environmental conservation during the normal course of business, identify benefit gain from such activities, provide the best possible means of quantitative measurement in monetary value of physical units, and support the communication of its results. Dear learners, if we refer to Chapter 8, Agenda 21, which stated that a first step towards the integration of sustainability into economic management is through establishment of better measurement of the environment as a source of natural capital and as a sink for byproducts generated during the production of man-made capital and other human activities. This is where environmental accounting comes as an important tool to measure the implications and to integrate economic values for the ecosystem. As shown in the slide, environmental accounting is used as an environmental information system to make it possible to manage environmental conservation costs and analyze the costs of environmental conservation activities versus the benefit obtained, and promotes effective and efficient environmental conservation activities through suitable decision-making for an organization. In addition, by disclosing the quantitatively measured results of its environmental conservation activities allows the organization to influence the decision-making of stakeholders such as consumers, investors, and local residents. To summarize, environmental accounting is a management tool that integrates the financial implications of environmental issues in the financial management systems of organizations. This will enhance more effective decision-making in order to promote environmental and economic sustainability. Now, let us move into the types of environmental accounting. According to the International Organization of Supreme Audit Institutions, or in short INTOSAI, in year 2010, there are 4 types of EA. Natural resource asset accounts, pollution and material physical flow accounts, monetary and hybrid accounts, and environmentally adjusted macroeconomic aggregates. Let us go through one by one. Firstly, the cost of natural resources includes all costs necessary to acquire the resource and prepare it for extraction. If the property must be restored after the natural resources are removed, the restoration costs are also considered to be part of the cost. Secondly, on the pollution and material physical flow accounts, provide information at the industry level about the quantity of resources such as energy, water, and materials that are used in economic activities, and quantity of residuals such as solid waste, air emissions, and wastewater generated by these activities. In addition, these accounts often include data on pollution and material flows in relation to other countries such as cross-boundary pollution and exports of goods. Examples are tracking trends in carbon dioxide emissions and energy use over time. Thirdly, in the monetary and hybrid accounts, separate data from countries' conventional accounts to focus on expenditures and taxes related to protecting and managing the environment as well as the economic contribution of environmental services industries. For example, the fees collected by government for resource use such as levies on minerals, forestry or fisheries, and funds spent on water treatment and solid waste management. Finally, the 4th type of environmental accounting is environmentally adjusted macroeconomic aggregates. Use the previous types of environmental accounts to adjust product and income accounts to assess overall environmental health and economic progress. The example include environmentally adjusted GDP and net domestic product or NDP. Now, let us march on the concept and framework of EA. As noted earlier, EA is a subset of accounting proper. EA target is to incorporate both economic and environmental information. EA identifies resource use, measures and communicates costs of a company's or national economic impact on the environment, which include the cost to clean up or remediate contaminated sites, environmental fines, penalties and taxes, purchase of pollution prevention technologies, and waste management costs. The framework used by EA is based on the benefit cost analysis, or in short BCA, or also known as cost benefit analysis, CBA. A BCA usually involves 5 steps as follows. Step 1. Develop a scenario that establishes and describes the system scope baseline scenario and analyze the boundaries. This should include a comprehensive description of all potential benefits and cost categories. In step 2, calculate the total impacts for each benefit and cost category, including the magnitude, timing, and distribution of benefits and costs. This step may include qualitative or quantitative description of difficult to value impacts, such as reductions in some adverse health effects, long-term ecosystem service impacts, or social and environmental impacts. Step 3. Compare total costs and benefits to estimate net costs or benefits to society as a whole. This step should include a discussion of the potential magnitude of effects that cannot be valued. Step 4 will identify the distributional impacts, for example, who pays the cost and who receives the benefits of the policy or program on different stakeholders. This step may contribute key information to an evaluation of the social impacts of a program or policy. And finally, step 5, evaluate the cost effectiveness if the BCA is focused on a single indicator of environmental quality or ecological sustainability. There are actually 5 environmental accounting elements as shown in the slide. First is the target period. In principle, the target period covered should be the same as the period covered by the company's environmental report. Information pertaining to the company's financial accounting, environmental activities, and environmental accounting should all be coordinated to match the said company's business fiscal year. Next, the scope of calculations. The scope of calculations shall be the same as in the company's environmental report. Environmental conservation costs and standards for measuring environmental conservation costs refers to the investment and costs measured in monetary value allocated for the prevention, reduction, and or avoidance of environmental impact, removal of such impact, restoration following the occurrence of a disaster, and other activities. Environmental conservation costs and standards for measuring environmental conservation costs measured in physical unit and is the benefit obtained from the prevention, reduction and or avoidance of environmental impact, removal of such impact, restoration following the occurrence of a disaster and other activities. An item and standards for measuring the economic benefit associated with environmental conservation activities contribute to the profit resultant of environmental conservation activities a company or other organization carries out as measured in monetary value. There are two main benefits of EA as shown in the slide. Merits for the company, merits from the standpoint of management, internal functions of environmental accounting. By using the EA tool, companies can monitor factors such as environmental conservation costs, environmental conservation benefit, economic benefit associated with environmental conservation activities. There are actually a lot of benefits of environmental accounting for an organization. Among others, it will help the organization for opportunities to minimize compliance costs and reduce operating costs, reduce costs through energy and resource conservation, allows the organization for having strategic decision-making regarding continuing or abandoning a particular product or process, competitive advantage by minimizing environmental impacts through improved design of products, packages and processes, and what most important, the organization would able to comply all the regulations in terms of environmental aspect. There are many examples of environmental accounting that have been conducted by countries, companies and organizations. The example shown in the slide is the case study of Canon from Japan. In year 2013, they invested 17.52 billion yen in environmental preservation. Of this amount, 8.46 billion yen was dedicated to improvements in such areas as countermeasures for global warming and the efficient use of resources, which at the end of the day resulted in benefits of 11.27 billion yen. In summary, the environmental accounting contribute towards achieving sustainable development. Environmental accounting enables an organization and its stakeholders to more comprehensively evaluate the organization's performance using both economic and environmental measures and to make improvements that reduce risk and waste, eliminate unwanted costs, and provide new opportunities for adding value. According to the Environmental Protection Agency, EPA, in year 1995, a successful environmental management system should have a method for accounting for full environmental costs and should integrate private environmental costs into capital budgeting, cost allocation, process, product design, and look forward-looking decisions. With that, thank you and hope to see you again in the next topic.